So you think with the way AT&T stock performed today that their earnings weren't all that great, but if you scroll down here, I mean most of the news outlets are reporting that AT&T did really, really well. They beat forecasts. We're going to talk about in a second. The Warner Media was down. We're going to talk about that in a second. But their earnings were pretty solid. For example, we have analysts expecting 76 cents EPS for the quarter. However, if you look here, we're going to go on this news outlet here. They earned 78 cents per share. So that was a beat on the quarter. And if we go here, analysts were expecting 40.3 billion for the quarter, and we're going to look at their 10Q. We got 40.9, almost 41 billion for the quarter. So it was a double beat. They did really, really well. Taking a look at their report, yes, they did drop in revenue, and that's because they sold off parts of their business. I think everyone who's been in AT&T knows that. And they're gonna sell more parts of the business later on this year too. So expect more drop-offs. But they went from 45.6 to 40.9 in revenue. However, look at their income. They went from a 13.5 billion loss to a 5.3 gain. AT&T's whole thing over this year and last year has been revamping itself to do more with less. It was trying to become a more agile company. And just take a look at the last couple of quarterly reports. It's working. It's working very, very well. I mean, heck, take a look about the year. They went from 171.7 billion to 168.8 billion in operating revenues. But despite the drop off, they managed to go from a 3.8 billion loss to a 21.4 billion gain. That is phenomenal, and it really shows this company's success at, like I said, becoming a more agile company. One thing I want to point out here, if you've been following me for some time with AT&T, you know that I'm more than a little worried about their debt. Now, once they pay off this year's debt, I mean, their long-term debt actually went down. I think Verizon's debt went up a little bit. So I'm glad to see AT&T's debt at least kind of going the right way from a long-term basis. So that's good news on my end. They dropped off a little bit on operating cash flow, but I'm not mad with the bottom line of this because from last year, most of the cash flow was due to asset impairment and stuff like that. So if that's the reason, I mean, I'm good with that. I'm good with the cash flow for the year end of this year. I'm good with so like their earnings were solid. Their earnings were really solid. I wouldn't say they knocked it out of the park, but I would say these are pretty good. Looking at their communication segment, they did really well. Most of these are up. DSL dropped off, but I mean, DSL is a die technology, so I'm not really surprised by that. Yeah, I mean, nothing bad to say about their communications. We got their mobility segment looking really, really strong across the board. Like, most of the numbers are up. Like, this is nothing to complain about at all. Business solutions, bit of a drop off, but, you know, that's fine. Their Latin America segment dropped off substantially. I'll be the first to admit that. However, they sold off this, so this, I mean, this will no longer be an issue. Actually, starting now. Now, Warner Media is one segment I want to talk about. Warner Media, with more revenue, they did drop off on their bottom line. And that's because they have so much, like, this year had so much more overhead with operating costs. However, I mean, after next quarter, once they shut off more Warner Media, this should no longer be a problem. As far as their outlook for the next year, revenue growth, low single digits, that's to be expected. That's fair enough. I mean, AT&T is not really a growth company, but I'm glad to see growth in some manner. Adjusted EPS from $3.10 to $3.15. Now, I know analysts had expected $3.16, so this right here must be earth-shattering. This must have just rocked their world right there. Yeah, but I don't think any of that is enough to warrant a 9% down and even more after hours. And they were down even before the Fed decision a few hours ago. I mean, look, beat and beat. I think this is a complete overreaction, but let's be honest. The market is overreacting general. That's their MO right now. And that's the way it's going to be for the foreseeable future, especially the way the Fed's going. I mean, look at Intel stock. Now, Intel is having earnings literally right now, and I'll watch it after I do this video. But I mean, the stock's down after hours, and I haven't looked at the earnings, but according to the news, they're doing really well. Here, take a look at Tesla. This just came out before I did this video. Tesla beats on earnings and revenue. Massively beat on earnings and massively beat on revenue. They did a really good job, but you know what? The market doesn't care. The market doesn't care at all. We are talking about Netflix dropping off 41.3% over the past month on good earnings. Really good earnings. They dropped off a little bit in the net profit margin, but I mean, look at their latest earnings call. Beat 61.4% EPS. Beat on revenue. Look at their growth year over year. But because they barely missed their subscriber count, I mean, I guess the stock just has to drop 41%. Yeah, I don't see any way that the massive drop off and the price today. Hell, Verizon dropped pretty substantially too, and Verizon's earnings were pretty solid as well. I don't see any reason why the drop off has anything to do with the company itself or the earnings itself. I think they were really good, and I'm happy to be a shareholder. And honestly, I'm actually looking forward. I'm actually happier to be a shareholder now that I see that AT&T is actually slimming down before becoming a more agile company and actually really starting to perform. And I'm happy holding my shares for the long term, especially when they break off from Warner Media. And yeah, we'll see where their future goes. But anyways, take care, have a good day, and eat vegetables.